Hello, traders. Welcome to Market Edge, ahead of the trade. I'm Owen Larson with Mission Winners, and this week we're seeing important signs of market improvement after a major technical shift. In today's episode, we'll break down the ETF landscape with Pat Walker, dive into a key trading principle you can apply right now to stay ahead of the market, and then finish strong with a full review of the MAXLIST stocks. Let's get started.
Weekly on the left, daily on the right, energy. You can see there's a ton of overhead supply on the weekly, and there is on the daily. It tells us very quickly, avoid energy stocks right now. That's it. You don't have to overthink it. Buy strength. And it's like, well, this is maybe where it's going to lift up. I don't want to play the maybe game. I want to stack the deck in our favor. That's what we do at Mission Winners. Let's move on. Dow Jones Internet. Oh, you can always see the name or the title right up here, okay? Just to let you know. And you can see on the daily chart, it is starting to pick up, but we'd like to see this start to lift through the falling 50-day moving average line. And you can see on the weekly, there's a tremendous amount of overhead supply. So you've got to be a little careful with that. IBD 50 is still underperforming. And take a look. Not a lot of power at this time. Needs to start pushing through the 50-day for us to really start getting interested in it. Continue onwards. What does that tell us? IBD 50 is a great list of stocks, okay? I just lay that on the table. But at this time, they're kind of underperforming. Gold miners. Well, that looks pretty good. Look at the run this has made. Look at the weekly chart. We do a compare and contrast. Here's the IBD 50 on the weekly. Here's gold on the weekly. How does that look to you? And that's why we've been involved with gold for a while. And trends pay. It's been a good run for us, okay? And I'm not bragging. I'm just sitting there letting the stocks, the price and volume action of the stock, guide our actions. Have we sold some into strength? Yes, we did. So we're in good shape. Continue onwards. That's GDX, the gold miners. Here's gold. Another one. Look at the simple base right here on the daily. And look at that trend. Oh, this is the weekly, excuse me. Isn't that nice? And here it is trending nicely on the daily. We've sold some into strength. We're in good shape. Good shape. We just watch it. By the way, I don't base decisions like off 5-minute charts. I don't look at 5-minute charts. I rarely look at 10-minute charts. The only time I look at 10-minute charts is right when a stock is breaking out to see if there's a volume surge coming into it, especially if it's earlier in the morning where it's too early to measure daily volume. That's a great tactic right there, by the way. Anyway, gold is working, letting it work for us. Lock some profits in, move on. Cybersecurity really needs to get through the fallen 50-day, and it needs to do it with volume. And you say, well, it's kind of picking up here, Pat. I agree. How's the volume? Where's the power? Not a lot of power right now. This needs to push through here, and it needs to push through with volume. Now, could it? Yeah, it could this week. There we go. Tremendous amount of overhead supply, though, folks. Look here on the weekly and look at the daily. What is overhead supply? Most people really don't even chew on that. Overhead supply means there's people that bought it up here that still own it. They didn't sell. And as it starts to go back up near their price, what do a lot of people do? Thank heaven it's near my price. I'm going to sell it. That's called overhead supply. There you go. Biotechnology, pretty much lagging here. I'd be cautious with that until it starts getting over the 50-day. Online retail, lagging, needs to show some power. Software technology is picking up a little bit. Tons of overhead supply here, okay? Pushing through the 50-day, didn't do it on a lot of volume. Just be a little cautious. Medicine below the fallen 50-day needs to get over the 50-day. I'll say it again, folks. Been doing this a long time. The air is better above a rising 50-day moving average line. I said that at IBD meetups for years. It's a fact. Continue onwards. IJH, by the way, you can always see the name up here. Mid-cap stocks. Okay, iShares Core, S&P Midcap, and it's below the moving averages. It needs to get over there. Okay, please note this, by the way. I'm not all negative and bearish. Nobody wants to be around people like that. I'm just saying at this time, there's just not a lot of opportunity in these areas. That's all. Aerospace and defense starting to pick up a little bit. By the way, you see these wide and loose chart patterns? Wide and loose chart patterns are indicative of high investor emotions. I mean, look when this thing was dropping. Whipping around. That's a phenomenon that you need to be careful with, okay? Whips down, whips up. You get caught on the wrong side, you could have a problem. So just focus on tranquility in the chart pattern. It'll help you. A lot of home construction. Look at the weekly. You won't see this in any chart book saying this is what you want to buy. Nope. So be careful with home construction. S&P 500 growth's picking up a little bit. Want to see it get over the 50-day. The air is better above a rising 50-day moving average line. IWM, small cap, still lagging. Be a little cautious there. I'm not saying don't buy it. I am saying, and I'm going to go back to this. What do you want to see? I'll be real specific for you. You can see this top right here. It's this base, okay? And yes, there was some accumulation right there. Could it push through there? Yes. By the way, note this bar. Oh, it's a green bar. Look at where it opened and look at where it closed. It closed below where it opened. It was met with selling. Isn't it ironic? Where did it stop? Right near the highs of this bar. Charts have memory because it's humans making the decisions, and humans have memory. What's it need to do? Push through here with heavy volume. And again, look at the overhead supply. Those are people that still own it. There's people up here that still own it. And every time it goes up near their price, what's going to happen? We're near our price, we're going to sell. That's called overhead supply. So we need to see some real power here. Could it happen? Sure it could. Sure it could. We just watch and see. But a lot of, some strikes against it. Real estate, not a lot of power. Be careful. Transportation's lagging. Wouldn't do much with that. Airlines lagging. Wouldn't do much with that. Banking, not a lot of power in banking. Be careful there. Insurance, whipping around here. Look at these tail bars right here and here and here. Just stay away from insurance right now until it gets over the 50-day. Leave it alone. By the way, when it fell on heavy volume. Look at that. Red bars, selling bars, much bigger than any of the green bars. So be cautious with insurance. By the way, not just the ETF, but the industry. Be careful with insurance stocks. There you go. Let's move on. Here we go. Regional banking lagging. Be a little cautious with regional banking. Mid caps lagging. It's formed a low-level cup with handle right here, and I'll draw this to help you. But what do you need to see? There you go. We need to see some power, and we need to see it over the 50-day. I'm going to say it again. You will dramatically improve your investing results if you focus on stocks that are, say, within 20, 25% of 52-week highs, and they're above a rising 50-day moving average line. Really, it's reality. It's fact. There you go. Oil services, a lot of overhead supply. Be careful there. Pharmaceuticals picking up a little bit, but still below the fallen 50-day. Here's a great lesson for you. Oh, it picked up here, but notice where it closed on that bar. It closed below where it opened. Do you see that right there? Oh, heavy volume, but again, it closed below where it opened. It was met with selling. Oh, now it's taken off here. Where's the buying power? Where's the volume? Power. Stock power is measured by combining the observations of both price action and volume action. And again, combined together, that'll really help you. And again, you don't have to forecast to get in line with it. QLD has a little base across here, okay? NASDAQ 100, tons of overhead supply. By the way, we missed this. What were we wrapped up in? Gold stocks. And that worked very well. But right here, we avoided this. Okay, now it's basing here. You've already got a price alert set. What do you have here? A higher low. This low is higher than this low. And I'll draw this to be very specific and precise for you, just to help. There's a low there. And there's a low there. Okay, this low is higher than this low. It's had lower lows all the way down. It could be a potential reversal. All right. What do we need to see? Well, there are some tops. I just want to do this analysis for you. Right there. Okay. What does it need to do? Still below the fallen 50-day, so there's a big strike there, folks. Tons of overhead supply. I'm not trying to sell you on this idea. I'm just trying to educate on what to look for. We've got a clean base across here. it needs to push through this line, QLD, with really heavy volume. That could be a potential buy setup. Given the amount of overhead supply, if you buy, go smaller to control, lessen risk. I will say this again. Good investing is not one size fits all. Okay? That'll help you. And again, control risk. QQQ, same situation, picked up a little bit. I'd like to see a little bit more power there. A little bit of volume on the weekly, though. See that? Slice volume pick up. That's good. Okay, QQQ, QLD. Move on. Retailing needs to push through the 50-day. We can say that's a green bar, Pat. Look where it opened and look at where it closed. Rallies right up to the falling 50-day. People know about this. Institutions know about it. We know about it, right? For decision making. What does it tell us? It needs to push through the 50-day and it needs to do a really big volume. And again, that's not the best bar right there. Okay. By the way, I had a tail bar here too. So, and look at the selling volume. Just things to be cautious with. Cloud computing picking up a little bit, but lots of overhead supply. Silver, a little sloppy there, not much going on. Steel, same situation. SMH picking up a little bit. There's a shelf right across here that you can see. Let's put it like so, okay? But what's it going to need? Really needs to get through the 50-day. I'm going to say this again because it's that important. The odds of making money, the probabilities of making money are much higher in stocks that are within 20, 25% of 52-week highs and are above a rising 50-day moving average line. Okay? You can say, hey, you said odds and probabilities. Yeah. Years ago, I taught advanced statistics on a university level. I know a little bit about it. Okay? One of my finals was 24 pages typed. I had high expectations. Okay? Let's move on. Rock and roll. Here we go. Semi's really lagging. Be careful there. Spider's picking up a little bit. Needs to push through here. Needs to push through the 50-day. And what's it need? It need volume. Now, here's the neat thing. It does have a higher low setup on the weekly. How about that? So maybe it's reversal of the trend. We'll have to watch and see. But remember, watch price combined with volume. People talk with their mouths and vote with their pocketbooks. How is voting illustrated in charts? Price action combined with volume action. There you go. Let's rock and roll. Here we go. SSO, same situation, higher low setup. You can see on the weekly too. Could show a potential change of trend. We'll watch and see. I said potential. I'm not saying it is. Okay. Solar, there's not a lot of power there. Small caps, not a lot of power there. Oil, really not a lot of power. Aerospace and defense. Now that one, look at that. Check this out. Well, there you go. There's not a lot there. Oh, look at this. This one doesn't look too bad. Aerospace and defense has weekly tops across here. And I'll draw this just to help you. You even have a kind of a slight downward sloping trend line. What would we like to see? Take out these tops across here. I can draw this for you here to help. Take that out and take it out with volume. But I have to tell you, there's distribution in here. Take a look. Look at the selling on that bar versus the buying on this bar. A lot heavier selling than buying. Not a lot of accumulation on the way up either. So is it a slam dunk setup? No, it's not. It's not a high probability setup. So how do you lessen risk? If you want to buy it, if it triggers, if you buy, look for good price action combined with good volume action and go a little smaller. I'll say it again. Good investing is not one size fits all always. Remember that. Adjust share size in relation to the potential risk in the chart. XBI pretty much lagging here. I'd be kind of cautious with biotech. Home builders lag and be cautious there. How do you build homes with materials? Kind of lag and be cautious there. Communications, there's still not a lot of power. Okay. XLE, yeah, there's some accumulation on the weekly. Okay, it needs to take out these tops. But again, it's below a falling 50-day. There's a ton of overhead supply up here. You can see, but Pat, there's tops right here. And I'll draw this to help you. I love teaching this stuff. Love doing it. Here we go. Push through there. But again, it's below the falling 50-day. What do you need to see? This needs to push through these tops right here, and it needs to do it with really good volume. There you go. Rock and roll. Let's move on. Financials kind of lagging there. Be cautious there. Industrials, not a lot of power. Be a little cautious there. I'll go back to this for just a minute. It did pick up on the weekly on a slight pickup in volume, but you can see on the daily there's not a lot of volume. This needs to push through the 50-day, falling 50-day, and it needs to do it with volume. I will say it again. It's simple, but it's a fact. The air is better above a rising 50-day moving average line. There you go. Let's move on. XLK picking up, higher low setup. I like that. I want to see it get over the 50-day. Maybe it will. XLP kind of choppy there. Consumer staples. Do a compare and contrast. This closed near the highs on the daily. This closed down. Okay. Which one has more power? Well, consumer staples is losing a little bit of power. There you go. I'm not saying sell, get out. Although it's no real clean place to own it either. But look for price and volume action. Look for strength. And always combine price action with the volume on the corresponding bar. And that'll help you. Here we go. Utilities, they're just basing. Nothing really great there, okay? Healthcare, higher low setup. This low is higher than this low. Needs to show some power, but it's below a falling 50-day. Again, stack the deck in your favor as best as you can. You can say, well, Pat, if this triggers, how can I handle it? Here's the real world for you. It's got some strikes against it. It's riskier. How can we lessen risk if we buy? If you buy, just buy less shares. There you go. We're about done. Consumers picking up a little bit. Consumer discretionary. But look at the fall in 50-day. I mean, it's been a long decline here. Also notice it rallied up. Look at the volume drop off. There's not a lot of buying conviction. There you go. Let's roll on. Metals picking up a little bit. Needs to show some more power over the 50-day. Oil and gas still lagging. Be a little cautious there. Retailing in a downtrend. I'd be cautious with that. Software in a downtrend. Got to be a little careful.
So the market is showing tentative strength with leadership starting to reemerge in some key areas, but we've still got work to do. In an environment like this, recognizing when a real trend change is underway is critical to staying ahead of the trade. Now it's time to dive into a key trading principle that you can apply right now to stay ahead of the market. In today's podcast, we're focusing on a critical skill for every trader, recognizing when the market trend has genuinely changed and how to position yourself without getting faked out. This past week, a major technical shift took place. Both the S&P 500 and the NASDAQ 100 officially broke above their long-term downtrend lines from the all-time highs. From a technical standpoint, that marks the end of the downtrend, but the real question is, how do we trade that information? Too often, traders hesitate, stuck between fear of being wrong and fear of missing out. That's why it's so important to focus on trading the chart that's right in front of you, not the story you're building in your head. A great example of that is the Tesla trade we took yesterday. If you haven't seen that video on Tesla, make sure you check it out. Tesla was a keyless stock, and it rose about 25 points from the trigger price. Not bad for a day's work, would you say? I'd say that's pretty good. When a major downtrend line breaks, it's a significant technical event. It doesn't guarantee that we won't see pullbacks, but it does shift the path of least resistance to the upside. Confirmation matters. One thing we watch closely is the 8 exponential moving average pinching up through the 21. When the 8 crosses above the 21, it often acts as a secondary, stronger signal that a real trend change is taking hold, and it can fuel continued buying pressure. At the same time, we stay mindful of congestion zones. After a downtrend break, prices often bump into old congestion areas. That can lead to some short-term chop, but overall, the bias has shifted higher. Managing downside risk is just as important. We keep an eye on those short-term moving averages. If price fails and decisively drops back below the 8 and 21, that's our early warning to tighten up or step aside. The bottom line is simple. When a downtrend is broken, you don't have to be reckless, but you do have to stay open-minded. Trade what's in front of you. Setups favoring higher prices deserve our attention, but we always keep risk controls sharp. The traders who recognize trend shifts early and have the discipline to lean into strength are the ones who consistently get ahead. Now that we've covered how to recognize a real trend change and how to stay sharp in this kind of environment, the next step is watching where the leadership shows up. That's why we always turn to the max list stocks. If leadership is going to emerge, it's likely to show up there first. Let's dive into this week's max list review with Pat.
Now let's get to the stocks. Here's Apple. Like the space that's formed on Apple right here, it's a tail bar, though. It needs to take this out. It does have a higher low setup, and it is working, but I'd really like to see it take out these tops here, or even right in here with volume. And just, full disclosure, we own it from lower, okay, and we're watching it. But we need to see some power. Have I added to it? No, it hasn't given a trigger to yet, but we'll be ready. I would prefer a cleaner, flatter base. But what we want isn't necessarily what the chart's going to do. We get in line with the chart, and we never argue with it. By the way, are we big in this? No, we're small. Start small. Remember this, good investing is not one size fits all. We go bigger on longer base breakouts, and you'll see them, and we go smaller on on riskier, less reliable patterns. There you go. And that will help you. There's Amazon. Amazon has a higher low setup here on the weekly or on the daily and on the weekly. This low is higher than this low, and it picked up on the weekly with a slight pickup in volume. You can see these tops across here. What does it need, folks? Well, it needs a good market, and it needs to push through these tops, and it needs to do it with volume. Right now, there's just not a lot of volume there. Okay, maybe it'll come in on Monday, and we'll be ready. By the way, see that little green hash mark? Yeah, I already have the price alert set. There we go. For Monday, let's move on. AMZU, this is a way to get an Amazon that's not as expensive. And you can see, though, here's the weekly and daily. Weekly and the daily, darn near the same pattern, okay? So it allows you to get an Amazon at a lower price, okay? So just want to point it out to you as a service to help you. Alibaba's lifting up, but you can see it had a higher low, but it's kind of whippy in here, okay? Look at this. It gaps up, runs up, and closes down near the lows. This is loose. Be careful with that, all right? Just pointing that out. It's not going to be on the key list. Baidu had a higher low setup, and it's lifting up, and it finally pushed through the 50-day. Is there a clean entry on it right now? No, but this would be nice if it could base a couple of days and then take out the highs here. That might be a good setup. And it would also be doing something else very important, pushing off the 50-day. But do you see the overall theme? There's some improvement in the stocks. There we go. Let's move on. Or in the charts. Goldman Sachs, you can see on the weekly and the daily, there's a shelf right here, but notice this bar here. And again, I try to educate. Oh, that's a green bar. But look where it closed. Look where it opened. Look where it ran up to. And look where it closed. It closed below where it opened on a pickup in volume. It was met with selling. It's not a super safe entry right here. Just pointing that out, okay? Trying to educate. Now, Google started to lift up on a gap up. What was the catalyst? Well, it had earnings. That's what did it. And there's a good lesson right here. Be careful chasing big gap ups. There were people that bought this up here, okay? It runs up a little bit and reverses down on a pickup in volume, okay? And they're down in it. So the moral is this. Be careful chasing big gap ups. It did pick up. Would watch this and see if it could base a couple more days and form a little shelf there. That could be a safer entry. There we go. Let's continue onwards. MasterCard, same situation. Lifted up a big reversal bar here. Okay. Needs to take out these tops with volume. And again, it was met with selling. Gaps up, reverses down. So not the simplest setup. Okay. We love simplicity. Meta, picking up here a little bit. You can see overall, though, there's some improvement in the max list stocks, and that's good. Higher low setup. This low's a little bit higher, it's about the same, excuse me. It is not a higher low setup. I'm wrong there. Double bottom setup. Picking up, slight volume pickups right here, but note the volume pickups here versus the selling here, it's about the same. It's not real powerful now. and it's below the falling 50-day. Really like to see some more power there. But there is a shelf right here and a slight volume pickup. It would be a very aggressive entry taking that out, just pointing that out. So you guys, well, Pat, let's suppose it triggers. Let's do the real world. How could I get in it? If it takes out these highs and it does it with good volume and a good market, okay, both constraints must be met. You could buy it, but go smaller because it's not a clean and simple base, and it's got a ton of overhead supply on the weekly and the daily. There you go. Microsoft. Now do a compare and contrast. You can see this. It's below the 50-day. It's way down here. And here's Microsoft. Oh, look, it's above the 50-day. And you can see this shelf across here. I'll draw this to help you. There you go. What's it need to do? Push through there, that line, push through with good volume. Okay, those are the constraints that must be met. And another important constraint, the market's doing okay. The M and mission winners, the market, comes first for a reason. So see some power. Also, here's the risk with this. Made a big move just to get up to the pivot. Expended a lot of energy, right? I mean, look, from here to here, had to go up almost 50 points just to get to the pivot. Be careful with that, all right? What does it need? Push through that line. I'll say it again. Push through that line with good volume. There you go. And a good market. Netflix. Oh, now do a compare and contrast. Here we go. Oh, this really one hasn't broken out yet, has it yet? No. Oh, look at this one. Oh, wait. This one did. Get rid of that. There we go. Going across these tops right here. You see that simple line right there? Breaking out. Just a nice base, folks. Look at the weekly. And here's the daily. We bought it and we've added to it, and it's working. But no, the key lesson is this, not, oh, Pat's bragging. No, train your eyes on what to look for. It's just a simple base, lifting up here and then following through with good volume. Look at the volume spikes on these bars versus these down here. That volume push. And we've added to it. I'm thankful it's working. One of the leaders right now. In fact, look at the weekly chart. One of the leaders. Let's move on. NVIDIA. Do a compare and contrast. Look at the weekly here, and then look at the weekly here. Well, there ain't a lot of power there, is there? No. So it tells you this. Kind of leave it alone right now. Let's move on. NVDL, a derivative of NVIDIA. Not a lot of power. Be a little cautious there. Now here's Tesla. We'll refresh this chart. There we go. And look what this did. See this simple base here? I'll do something to help you. Simple flat base. Ain't nothing fancy. And it pushed through. And look at the volume spike on this bar. On this bar, the stock did volume of, I'm going to round to 168 million shares. On this bar, it did 94 million shares. On this bar, 168. There we go. Look at the volume spike. And it's just a simple base. Here's something else that's a great tactic I'll share with you. When a stock is starting to approach a pivot earlier in the morning, take it down to like a 10-minute chart. Here's a 10-minute chart. Look at the volume that came into it here. Right there. That's the first 10-minute bar. And then it pulls back on less volume, and then it lifts off again on a pickup in volume. Right in here and here. There you go. That's how you can massage yourself into a stock. And it worked. There we go. I mean, that's a good start for the day. And I'm not bragging, please. No, I don't do that. But I am pointing out, I like when they do that. And again, what's the theme? Just simple sideways action, lifting through tops with volume. Volume's the fuel that lifts the ship. There you go. And it's working. This keeps going. What do you think we'll do? We'll buy more. There we go. What are the constraints? I'll teach this for you. Then I want to help. Okay, that's a big reason we started Mission Winners. Take out Friday's highs, and it needs to do it with a volume pickup on lesser time frames. Okay, and we need a good market. Those constraints must be met, or we will not buy more. That's simple. Also, another very important lesson, where we buy the same amount as what we own, No, we won't. We will buy less. Never pull your average price up too much. If you own 50 shares, don't buy 50 more shares. Buy less than that. Buy 20 to 30. Don't pull your, I'll say it again. Please don't pull your average price up too much. There you go. Just trying to help. Next one's TSLL, which I'll refresh this for you. Did the same thing. Here's TSLL and here's Tesla. And you can see this one had a lot more zip to it. And that's why we're involved in Tesla and not TSLL. There we go.
That wraps up today's episode. Huge thanks to Pat Walker for another great deep dive and to all of you for tuning in. If you found this helpful, make sure to subscribe to Mission Winners here on YouTube. Check out missionwinners.com and stay sharp out there. Master your strategy, trust the process, and maintain your edge.